In the given question, we are given the data for Lennon Industries as on January 1, 2014. It has a stock outstanding as follows: cumulative preferred stock, common stock, and in addition the company has issued 1,60,000 common shares, and the date of acquisition are given as follows. And the shares issued on these respective dates are also given. Now coming to next, we are given that the company has realized $90,000 before tax insurance gain on the expropriation of investments originally purchased in 2000. On December 31st, 2014, the company has a net income of $3 lakh before tax and exclusive of this gain. It means this $3 lakh is exclusive of this $90,000 gain, and the tax rate is given as 50%, and we need to compute the earnings per share data that should appear on the financial statements of the company as on December 31st, 2014. Now coming to next, the formula to calculate earnings per share is net income divided by weighted average number of shares outstanding. So we need to calculate both the things. Income before income tax and extraordinary items is $3 lakh as given in the question. Income tax rate is 50%. So 50% of 3 lakh will be 1,50,000 multiplied by 50%. It will be $1,50,000. So income before extraordinary items will be $1,50,000. We'll add extraordinary gain net of taxes in it. So the extraordinary gain is $90,000 and the tax on it will be $45,000. 50% of 90,000. So it will be 45,000. So the net income including extraordinary gain will be $1,95,000. So we'll reduce the preference dividends from this net income to calculate the net income available to common shareholders. So the preference dividend will be $1 million multiplied by 6%, that is the preference dividend rate. So we'll get $1,35,000. Now coming to next, the net income available to common shareholders is $1,35,000 as computed above. The extraordinary gain net of taxes as computed above is $45,000. So the net income available to shareholders excluding this extraordinary gain will be $1,35,000 minus $45,000. So we'll get $90,000. Now we'll calculate the weighted average number of shares outstanding. The shares outstanding as on January 1 are given to us as 2 lakhs. And on April 1 the company has issued 50,000 additional shares. So we'll add 50,000 here. So we'll get 2,50,000. And on July 1 the company has issued additional 80,000 shares. So we'll add 80,000 here. And on October 1 the company has issued 30,000 shares. So we'll get 3,60,000, and the fraction of year will remain same in all the four. So the weighted shares will be calculated as, this is A, this is B, it will be calculated as A multiplied by B. So we'll get 50,000, 62,500, 82,500 and 90,000. So the weighted average number of shares outstanding will be the total of these four. Now coming to our formula, the earning per share will be calculated as net income divided by weighted average number of share outstanding. So the net income excluding extraordinary gain is $90,000 divided by 2,85,000, that is the weighted average number of shares. And the extraordinary gain is $45,000 and the weighted average number of shares are 2,85,000. So we'll get 0.32 and 0.16. So the total earning per share will be $0.48.